The biggest news of 2021 for me was after 1 year and 5 months of standing in the blistering heat of summer and the bitter cold of winter outside the New York Stock Exchange, I finally got back inside again at the end of July, beginning of August, but only from the balcony overlooking the trading floor. It was 2 more months before I finally made it back to where the action is at camera 9, standing here watching the closing bell every day. Being on the trading floor is better than being up here.
Hello, Lilo.
And it's much better than being stuck out there, though I've got to admit I do miss the furry pets of Wall Street. And while I was away, there were some big changes inside. A multi-million-dollar refurbishment of the VIP entrance, which is the first sight that guests get of the old building, including a refreshed mini-museum of artifacts from the exchange's historic past. This is my favorite, a display of Tommy Hilfiger jeans. But it reminds me of the day Levi Strauss came to the exchange and made us all wear jean jackets. But what you want to know is what kind of year it's been here, where the money's made, and of course, sometimes lost. To help me understand 2021 better, I've turned to 3 old stock exchange hands. Jay Woods spent 28 years as a market maker at post number 6. You stood here for 28 years as a market maker, and I keep your place warm every day because I'm a friend of yours. Matt Cheslock has been an equity trading professional for 30 years. Tim Anderson has seen it all many times over. The year opened with a phenomenon no one remembers seeing quite like this before. Locked down, mostly very young and inexperienced so-called retail investors with a lot of enthusiasm began trading stocks in their basements, betting against hedge fund bosses and driving up the value of firms the professionals were trying to short.
This giant surge in what is now referred to as meme stocks, led by pretty much GameStop, and a number of others tagged along.
It takes on a life of its own, and social media has played an enormous role in perpetuating this.
You want to see people come into the marketplace and learn by doing, and they got that experience. Now, was it the normal experience of trading? No, it wasn't.
Don't lose your minds. I understand this is insane.
This Twitter app illustrates how seriously these day traders take this. You can hear constant chatter as they advise and cajole one another into buying or selling the memes.
We've been fighting forever. We're going to get out of this, and we're going to end up winning.
Ironically, the company that facilitated the meme stock frenzy came to market itself in July at $38 a share, raising almost $2 billion. And another closely watched initial public offering was Coinbase, a company that helps people buy and sell cryptocurrency and which has no physical headquarters. It is a virtual company. Cryptocurrency truly came of age in 2021, not least of all because a new Bitcoin ETF, exchange-traded fund, debuted here at the New York Stock Exchange, and there's a similar one at the NASDAQ in Times Square too.
It's early innings as far as the crypto industry goes, but it's an asset class that's here to stay.
When things are going great and Bitcoin, for example, hits 60,000, people say it's going to 125, right? Now Bitcoin comes back, $14,000 in a matter of 2 weeks. I don't really see anyone pounding the table saying buy this dip.
These stocks have taken a pause over the last 4 to 6 weeks. And I think that people are waiting to see what developments come out of statements from the SEC, so stay tuned.
One of the most volatile sectors has been the Chinese ADRs, American Depository Receipts, the way Chinese companies trade easily in New York. Some have been delisted from the NYSE for most of this year amid souring US-China relations. Didi came to the NYSE in July, but swiftly ran into regulatory issues with the Chinese government and is now transferring to Hong Kong.
Caveat emptor, beware of what you're buying, because there are factors behind the scene that nobody can control.
China wants to have more of a say in how they're regulated, how they're watched, and they're pulling the reins in on them.
If we're going to have the U.S. government sanction them, I'm not sure that you're going to see a lot of the retail investor that's going to step in and do it. There might still be the sophisticated investor, the professional investor that might have the ability to get involved.
On a global scale, the year's been dominated by 2 key influences. COVID-19, especially the Omicron variant, which sent the Dow down over 1,000 points on Black Friday, November the 26th, and inflation worries. Strong demand, coupled with supply chain issues, has seen prices rising on a scale not seen for 30 or 40 years. The focus has been on the central bank and how it would react. When would it begin tapering the $120 billion a month being spent on asset buying that's been propping up the US economy?
A little bit of inflation is probably good for the economy and good for the market. Now, you don't want to go back to where we were in the 70s and 80s. There's no doubt about that. And I think it's inconceivable that we're going back there.
It's a cycle, right? We're going to see it again. Our kids are going to see it. I don't know if they've handled it tremendously. They could not put their finger on it for years and years and years. And now suddenly it's here and it's full blown.
One thing I can say about Chairman Powell is he's been very transparent and very direct when he talks at the press conference after a meeting. So we expect tapering to increase and to finally be done. We expect rates to rise. The question is how far, how fast, and how many rates will there be in 2022? The consensus is 2. I've heard 3.
And as 2022 begins, what is the year ahead going to be like, as seen through the lens of the New York Stock Exchange?
The long-term horizon, look, this is where the money's going. You know, money's not moving from equities.
I'd be very careful about the super high valuation stocks unless they could demonstrate that they are growing, not just revenues, but profits at a very high rate.
Energy, which was the biggest loser last year, the biggest winner this year. So what's the biggest winner this year? 2022, is it our biggest loser? Utilities and staples? They're starting to lead as we end this year, so who knows? It's going to be fun to watch, and being down here is going to be fun to be part of.
Hi, guys.
And we'll be here reporting on whatever actually does take place in 2022.
You see what I have to put up with here?
John Terrett, CGTN, the New York Stock Exchange.